Hi everyone. Today I'll be talking about the midnight open price and how this key level can be used as a powerful reference point to improve your precision and consistency in trading. Understanding how price reacts around this level can completely change the way you analyze market structure and plan your entries.
All right, let's talk about the midnight open and why it's such an important level to pay attention to. The midnight open is a fixed time-based reference point, meaning it doesn't change. The algorithm often reacts to this level, so it's something we can use as a consistent guide in our analysis. But before we even focus on that level, you need to establish your bias. Are you bullish or bearish? That comes first, because the way you interpret price around the midnight open depends entirely on that bias. Once you've got your bias locked in, that's when the midnight open becomes useful. You can start using it to help position your entries with more precision. ICT mentions when you are bullish, look to buy below the midnight open, and if you are bearish, look for sells above it. So, with that in mind, let's take a look at last week's price action and see how price interacted with the midnight open and how we could have used it to anticipate those moves.
First, you need to determine your bias. Ask yourself, what has price done recently? In September, we saw an expansion to the upside, reaching new all-time highs. Then, as October opened, price took out those September highs and dropped aggressively, repricing back down into the equilibrium of September's range, right into a weekly fair value gap. I've also highlighted a small fair value gap sitting within the premium range, and that's something I'll be monitoring closely on the lower timeframes for potential reaction. Now remember this key point: if we're bearish, premium PD arrays should act as resistance. If we're bullish, discount PD arrays should act as support. Keeping that framework in mind helps you stay aligned with what the algorithm is likely doing, and it gives your trade idea structure and clarity before you even think about execution. First, you need to determine your bias. Ask yourself, what has price done recently? In September, we saw an expansion to the upside, reaching new all-time highs. Then, as October opened, price took out those September highs and dropped aggressively, repricing back down into the equilibrium of September's range, right into a weekly fair value gap. I've also highlighted a small fair value gap sitting within the premium range, and that's something I'll be monitoring closely on the lower timeframes for potential reaction. Now remember this key point: if we're bearish, premium PD arrays should act as resistance. If we're bullish, discount PD arrays should act as support. Keeping that framework in mind helps you stay aligned with what the algorithm is likely doing, and it gives your trade idea structure and clarity before you even think about execution. Here's the 1 hour chart showing the price action that unfolded last week. Now watch what happens when we add just one key reference point, the midnight open. When we combine this level with our bias and the simple rule, buy below the open if you're bullish and sell above the open if you're bearish, the entire chart starts to make a lot more sense.
Now that we've got our rules and bias in place, we can start looking at specific areas on the chart where we could jump in and position ourselves. We're bullish, so ask yourself these things while looking at the chart. Are we below the midnight open? Who's been making money lately? Buyers or sellers? Have we taken liquidity yet? Does it make sense to go long right now? Take a second, pause the video, and think about where you'd look for longs with these questions in mind. Then we'll zoom in and check the lower time frame to see where the high probability entries are forming. So we opened at midnight on Monday and price ran higher during the London session, making some engineered highs, then started to retrace. Notice the moments when price dropped below the midnight open. Every time it did, we could frame a market maker buy model on an even lower time frame. There were plenty of opportunities to get into longs on the lower time frames, and every single one of them presented itself below the midnight open. By combining our bias with the midnight open reference, the lower time frame entries become much clearer and easier to frame. On Tuesday, we opened and immediately displaced lower, moving through the 4 hour bullish fair value gap during the Asia session. London continued to push price lower, almost like it was in a rush to get somewhere. We've already highlighted the new week opening gap and the weekly bullish fair value gap that price would likely seek if we broke below the 4 hour fair value gap. Notice here, we fell just short of reaching the weekly fair value gap, and then displaced out of the new week opening gap range. Now look at the timing. When you ask yourself the three key questions and see that we're well below the midnight open reference, you can use it as a target because the algorithm tends to reprice back toward the open. Continuing to sell here doesn't make sense since we're bullish on the higher time frame and have the context we've gathered. Price then starts to expand back up and reaches the midnight open during the PM session. You can frame longs toward the midnight open by using cycles and the principles I've been teaching on my YouTube channel. You have your A and B marked. It's all about jumping in on the journey to B at the right time. That's where the lower time frame entries and precision come into play. On Wednesday, we see a similar profile but flipped. We open and run higher, following the low we formed the previous day. So where are we likely to go next? Well, on the higher time frame, we've already framed the bearish breaker, specifically the bearish fair value gap, which I've highlighted in red. We're above the midnight open and price has reached a key level. Now stop and ask yourself the same questions, then think, does it make sense to continue looking for longs? If we flip the perspective, does it make sense to look for shorts? Which option aligns better with the context? In this case, shorting toward the midnight open makes sense because buyers have been dominating all day. You can still participate in longs, but you have to think fractally, applying the same logic on time cycles. I'll give you a clue on the charts, but we'll dive deeper into that another time. By the PM session, we drop below the midnight open into the 4-hour fair value gap. Pause again and ask the questions. Which trade makes the most sense here? Whether you take the short depends on you as the trader. It's your decision whether to participate in moves that go against the higher time frame order flow or wait until everything aligns. There is no right or wrong. Remember, you're the operator. Never let the market make decisions for you. That drop might tempt many traders to jump in, but this is all designed to manipulate your thoughts. Always trade with a plan derived from the higher time frame context. On Thursday, we opened and ran higher, with London stopping just ahead of the range we've highlighted on the higher time frame. Once price reaches that area, pause and ask yourself the same questions, then think. Does it make sense to continue looking for longs? If we flip the perspective, does it make sense to look for shorts? Which option aligns better with the context? Can you see how blending all of this together keeps you in control? By using the midnight open as a reference point, you can visually gauge whether it makes sense to keep going for longs or if it's better to wait. On Friday, we opened and ran lower, taking out the Tuesday low. Remember that Tuesday, we fell just short of reaching the weekly fair value gap. Today, price reaches that level and then displaces back above the new week opening gap. Notice how, once again, multiple opportunities show up to position yourself long below the midnight open. By keeping the midnight open as a reference point and combining it with your bias, you can visually see where high probability entries form throughout the week. Now let's step back and look at the whole week's price action on the hourly chart. As you do, ask yourself the key questions at each turning point and focus on the opportunities that presented themselves last week. If you take this simple rule, combining your bias with the midnight open reference, and have the patience to wait for the right setup, you'll notice a huge difference in your trading. The key takeaway here is trading with structure and patience beats reacting to every move. The midnight open gives you a clear visual reference to stay disciplined and aligned with the higher time frame. Thank you for taking the time to watch. I hope this provides some clear insight and helps you recognize the importance of having a plan. Using the midnight open as a key reference point can really level up your trading, helping you stay disciplined, spot high probability entries, and make more informed decisions. Remember, the market doesn't have to control you. You're the operator, and having a framework like this keeps you in control every step of the way.